Alrighty, good morning. It is the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. I'm Harvey Freed alongside of me, Harry Glanz.
Good morning, Harvey. Good morning, everybody. Looking forward to a great show, brother. Let's go. Bring the energy, bring the heat.
We love it. We talk about a steamy one out there. Becky Yaley comes all the way in from the downriver area. Hey, Becky.
You're like talking about a steamy.
Yeah. Why do we, what we do in Metropolitan Detroit, we categorize every place, okay?
Oh my God,
the Woodward Corridor, downriver area, east side, west side. Let's go up north. It's just what we do.
I'm from LP, baby. I'm representing.
They do that in other states too, Harry. They do it in, like South Beach, in that area. And then you got the west coast of Florida. And yeah, they do it in different states.
That's great.
We bring on Nick Calte here. How about this guy, Nick Calte?
Hey, good morning, everybody. How you doing?
Remerica United. We won't say where you're from or anything. We'll just keep it like that. Nick, hardworking real estate agent. Nick and I have had the opportunity to work together in the last 6 months. Been a lot of fun. And I love the energy. Nick, we hang out a little bit too. We had lunch. We talk real estate and mortgages. I started, I thought I was going to mentor you, but as much as most of the people out there in real estate. So congratulations. Thank you for joining us again.
Thank you for having me.
We're going to take our calls here, 248-539-9797. And Becky, always 1 hour of Hardcore Mortgage Real Estate and Business Show. It's funny, we get in the studio here, and Adam had the previous show had an opinion on where this housing market might be going. And it's funny, you talk to one person, Becky, and they can't get the contractors out to the house. And here Adam says that, hey, he's got people ready to do some home improvement jobs.
Listen, as soon as I heard Adam, the show before us, say that, I was like, listen, you let me know who's looking for work and I'll give them some work, because I got people hitting me up looking for people just to show up. My pool's about to start going down finally 2 years later.
Oh, cool.
And it's like I'm trying to pull all the strings and make sure things are actually happening. So I'm about to experiencing who really needs work and who doesn't. So
on Saturday, June 25th, 2022, it's been 97 degrees out for 5 days in a row, and you're finally getting your pool in.
It's finally happening, yes.
And other people are looking for work. I don't get you. Right, exactly. We don't know.
Well, Harry, I'm glad you said it. June 25th, 2022. Of course, next week, already July 1st. We are halfway through this year already. 2022 is really interesting. Nick, it's sort of been a normalizing year, they're calling it. Normalizing is the headlines. Housing boom, of course, the rates plummeted. We had the pandemic. Those kind of numbers are probably unsustainable. Definitely wiping out the inventory out there. I mean, it's less than, 30 to 45 days worth of inventory. It created this crazy buying frenzy. Nick, there's no homes on the market, but we still have a little bit of this buying frenzy.
Oh, yeah, absolutely. We have a ton of buyers out there, and the problem is they've either lost out on a few homes or they don't understand how competitive this market is. But, yeah, we are still at record low inventory, and the problem is getting the right professional behind you that can help you get into these homes that are still there when there's little to none.
Yeah, Nick was on the podcast this Wednesday morning, and we were talking about it. If you go back and you watch it, go to our website, go to our Facebook page, you'll see Nick on there on the Hardcore Mortgage Real Estate and Business podcast. Nick, there's no shortage of buyers out there. There might not be like 20, 30 offers on a house, but there's still
10.
What?
There's still
5, 6, 7.
Yeah.
Overbidding, overpriced, all those things, crazy contingencies that we talk about, never waiving inspection. You're still seeing that kind of thing. There's just not 20 to 30 of them out there.
Yeah, and the other thing we're seeing, too, is they're not, 30,000 over, but they're definitely still over on price, too. And that's what I want to talk about today, too, is holding your professionals accountable, because when you hire an agent, even as a buyer's agent, or you're even hiring a lender, we're working together as a team to make sure that you can win that offer. And with that still going on, it's still hyper competitive. We lost a lot of buyers when the rates went up, but the ones that remain are very well informed, and they have professionals there that are helping them win theirs.
Well, they're sticking the course, right?
Yeah.
They have to stay the course. They have to be smart, Becky, in order to stay the course, or else they'll get frustrated and drop out.
I mean, that's what happened before. People were getting frustrated and they dropped out, but then they missed out. They came back in, and they came back into higher rates and higher house payments. It's a reality. But the thing is that this is not a looky-loo market. There's only serious buyers out there right now, which is key. And
That's right.
I was actually speaking to someone just yesterday, and they were talking about how their friend was selling their house, and the seller got frustrated because the offer came in at asking, because people have it in their mind right now that everyone's going to be coming in droves and throwing extra money at these homes, and it's just not, because buyers are getting a little bit more savvy and they're being a little bit more conservative how they're writing their offers.
Yeah, but common sense wise, and Nick, you're on the street every day as we are. Common sense wise, it's called the asking price, right?
Right.
The asking price. So if somebody offers you what you're asking, you're getting what you want. So shouldn't you take that offer? Because that's what you've asked for.
Right. Well, I think because of the last couple of years, it's just been a suggestion. Let's say you're
I
asking
like
for
that.
Now it's a
250.
I like
suggested
that,
price.
yeah.
You're
I
asking
like
for
It's a
250.
suggested
retail
price.
price, SRP. Yeah,
You're
I like
asking
that.
for
Adjusted.
250,000, but you end up getting 280 or 300,000,
Yeah.
and that's what we're seeing now too. And I wanted to go into that too with some of the price drops we're seeing. Is there are people pricing too high, but as you said, the remaining buyers in this market are very smart, and they are still getting competitive because we have such low inventory.
Always that number one question we hear most of the time. Should I wait to buy? It's never been a good recipe. And I always said like boats and cars and gas and food, probably not a good idea. But housing's different. It's completely different. It's not a luxury item, okay? This is a roof over your head. It's a lifestyle. And as I was writing that last night, I said, yeah, there's a lot of comparisons to you guys. No, this is a house. This is a lifelong, really investment for most people.
One of the best investments you can make.
There you go. We talked about it last week, too. We had another agent on, another Nick on, really going there. And, like we got into that conversation here, as we always say, you can buy a house for 3% down. You can buy a house for 0 down. The lender is the 97% partner there with you.
Yeah, they're the partner, and you get to live there. The buyer, the borrower, they get to live there with their family, enjoy it. And we're lending 97%, or in some cases a little bit more, some cases a little bit less, but we're lending the majority of the transaction. And that's why we have to get the documents that we need to get. That's why when people
I'm so
ask
glad
us,
you're bringing this up.
right,
So glad.
right, everybody asks you, well, you're asking for an arm and a leg, and you're going to take my firstborn. Well, I don't know. We kind of need what we need so we can check you out to make sure that you can repay the majority of the funds and the financial stake that we have in you. We believe in you. We need to see that you believe in us by sending us a payment every month.
Yeah.
And-
I was actually talking to someone that's on the lending side, I would say a little bit more of a rookie. And they said something about, like they're having a hard time relaying the information to the clients on, like they're getting frustrated when they're asking for things. And I said, okay, well, honestly, you have to make sure they understand that we are the 97% investor.
Partner.
You are putting 3% down of, like, let's just say $3,000 down on a $100,000 house. We are showing up with $97,000. If I need a pay stub, I deserve that pay stub. And that's how you have to relate to your clients, because this is the necessities. You need to do certain basic things. You have to do your due diligence to show that you have credit worthiness to own a home, because right now home ownership is a necessity. Affordability is a little bit of an issue, so we have to make sure that we are putting our best foot forward for you to set you up for success now and then in the future.
Yeah, how many people would do this if you really take a look at it? Your friends come up to you and they say, "Listen, we want you in a business transaction." Okay, what's my end of the deal? Well, you give me 97%, and I'm only putting up 3%, but I get to live there. I get to be there.
Harry,
Would
even
you
in-
do that transaction?
You get all the benefits
maybe
of the
not.
transaction.
You would never ever do that.
In our
Like,
industry,
Circle
20%
does not get
down.
the square.
Right.
Becky, 20% down is a big number in our industry. When families, hey, look, I'm going to put 20%. Our lives light up. You saved a lot of money. So, again, it's a different industry. Housing is different. I get that sort of shines a spotlight on it. Things are just a little different. There's some housing data that came out at the end of this week. There's a mixed bag, but very surprising, Nick. Home sales were actually up a little bit in April and May, and they revised those figures. So, but they did show that the future here just leveling off a little bit. Again, home values continuing to rise. Nick, what are we going to do? They just can't build 1,500 brand new ranches everywhere. There's just this horrible supply shortage out there. And Nick, these clickers, we're going to get to that a little bit. Sometimes families that are clicking buttons, those houses have already been sold and off the market.
Right.
You've done a lot of research on this.
Yeah, actually, I really have, and that's okay. We'll get into that too. That it's not a bad thing that people are clicking buttons to find agents and homes and lenders, but again, we just want to make sure you're holding them accountable, because there's a lot of new agents, a lot of new lenders in the industry. Some of them are really killing it out there, but some of the other ones, they're not doing their due diligence for you. And if you don't have the best team behind you, you're really not giving yourself a fighting chance.
Pretty tough as an agent, too, if you just want to comment on this. The sellers need to consider all of the variables. Again, it's not always highest and best. Sometimes that deal doesn't close on time. I'm dealing with one of those now that we ended up taking the highest one, said June 28th close, and we're hearing nothing but excuses now. So
Right, yeah, exactly. And that's what's happening, too, is that you have buyers coming in with these bogus approvals from other lending companies. And if you're not calling up the lender and having the conversation before you take an offer, then, again, you're just not doing your due diligence, because there's a lot of that going on right now.
all right, again, a lot of lenders out there, a lot of realtors, but not everyone's the same. Well, maybe shine the light on some of that stuff. 248-539-9797. We'll be right back. Alrighty, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. You can call us at Capital all weekend long and through the July 4th weekend, all weekend long there, a little extended weekend at 1-800-LOW-RATE, the best mortgage banker. Get real professionals in your career. You know, we've always had the younger guys are always texting me, Harvey, I hate that word when you guys use experience and this and that. Sure enough, they might be right. 35-year mortgage banking expert scrambling on her purchase. And again, we need that deal to close. And Nick, of course, in our real estate world, everything's a domino effect. This client has to close on this house so that they can move on and buy the next one and so on.
Right, exactly. And that's some of the problems we're having with even agents too. Well, I've been in this for 40 years. I've been in this for 50 years, but they're not adapting. And, you know, the past decade, we've seen blue skies and you know, clear water, but all of a sudden it's getting a little choppy out there. So the problem is some of these agents don't know how to adjust to that. And some of these buyers are dropping out. But again, like we were talking about earlier, the ones that remain are the experienced ones.
I mean, you can have experience or be new to the business, but you can also be out of touch. Either way. And I feel like there's a lot of people that are out of touch with the market. And if you can't adjust, if you're an old dog that can't learn new tricks, then you're in the wrong profession, because this is an industry that is always ever changing. And there's a lot of outside influence, and you have to be able to adjust with what's happening in the market. And a lot of that has to do with the clients and calming that storm, because you have a lot of pre-approvals out there. And you're talking about, even a month ago, they were looking at 5% interest rates, and people were clinching their pearls over that. Right now, we're in the 7s if you're in your subpar credit. And that affects your payment pretty substantially when affordability is such an issue right now for everybody. And so it takes that knowledge. So let's just not maybe use the word experience, the knowledge, the way you're going to relay that information to your clients to make sure that they are still in a home that they can afford, and this is still the right thing to do. So I have a client of mine, she's a friend of mine, and I just did her refinance last year, 2.99. Hooray. Well, now she's looking to buy another house. She's upgrading. And the rate's like 6.25. And I said, look, it's okay. When I bought my first house in 2006, guess what my rate was? 6.25.
Right.
It's going to be okay. I refinanced several years later when the market allowed me to. I go, so this is your forever home, not your forever loan. There's a difference.
Ooh, I like that. Right. How long you're going to stay in the house is different as how long you're going to actually keep that mortgage that we're going to give you.
Yeah, so I like that, what Becky's saying. Becky emailed me the other day, and we're talking about rates, and I said, Becky, it's not your fault that the rates went up. It's nobody's fault that the rates went up. It's not a buyer, it's not a seller. It's just the market is what it is. You're gonna buy the house or you're not gonna buy the house. And in terms of the knowledge base that we're talking about, we like to use words like experience, and I've been in the business for 40 years, and that's just so old man get off my lawn conversation.
Yeah, totally.
It really is. And we look at it, the number of transactions somebody does, the involvement somebody's in. If you've been in the business 35 years and you're doing one transaction every other year, what's that mean? I mean, if you've got somebody that's been in the business 2 or 3 years and they're doing transaction after transaction, I'm going with the one that is doing the work right now.
That's the experience we're talking
about.
about.
They're in it right
The ones
now.
that are out on the streets.
If you're on the street and you're in it right now, that's the person. Those are the people. Those are the teams that you want to be with, because they're not out of touch. And, you have to be flexible. You have to understand what's going on in the market now, because markets change. Environments change. That's what it's all about. Things are changing rapidly. And if you're not used to it, and then what happens is the calming influence comes behind that. They know, because they've been through these cycles many, many times. And this cycle right now, it's happening very, very rapidly, but it's happened before, just maybe not as fast. But it's happened, and it will continue to happen. So you have to have something that's, I heard a great analogy. We're all in this boat right now, and the waters are choppy. But don't get out of the boat, because if you dive into the water,
oh boy,
there are sharks in the water, there's 30-foot waves in the water. There's things that you don't understand. Stay in the boat, see the course, and let's ride through it together. And that's the deal.
I like that
The
boat
reality
analogy.
is this, too, though, is that the interest rate hike that we're seeing was already supposed to start happening in 2020.
Right.
And then COVID happened.
Yep.
It was supposed to be this gradual change. Well, then COVID happened, and then it just reversed everything, because it was no one knew how to handle that, right? So they reduce these rates exponentially. Well, now they're doing the flip side of it very, very rapidly. It was a little bit too much too soon, but at the same time, this was supposed to be a 2-year gradual thing, and now it's like in a month. Here we go.
Right.
Boom.
It happened in a month.
Yep.
Nick, home ownership, a lot of fun. We'll get into some numbers a little bit later. I did some renters versus in your wealth and all of that stuff. I pulled some good data out. But the persistency, we have people working at home. We said it earlier. Families are working at home. If you have that luxury of working at home, there's like 50% of the people want to be city dwellers. The other 50% are saying, you know what? I'm not fighting over those great houses in the city. I'll stretch my legs and even check out maybe a USDA loan, go out to a rural development area just outside of town. And that's working a lot for a lot of families, and they find some value there.
Yeah, absolutely. Those are definitely options too. And I worked one recently, and everything went perfectly fine. It was a smooth transaction. People are starting to work from home. That makes it a lot easier, so you don't have to fight with the downtown, flooded areas of so many buyers. That really is an option. It's a great option too.
All right.
I feel like it changed, like what people were looking for in homes changed. Even myself, right? There was a point when I was like trying to buy a house. I'd be like, oh, well, how far I have to drive to work is going to be contingent upon what areas I'm looking for. And then again, the pandemic changed the perspective of, well, if you are so inclined to be able to work from home, I understand that everyone can, but if you are able to, now it really doesn't matter where you're living. I have people that are relocating from California to Michigan, but they're able to work remotely. So it doesn't matter, so now they're going to be coming to Michigan, be closer to their family, but their employer still basically is in California, but they can work wherever they want. So in those situations, it's changing what people are looking for in their homes, and they're looking for more space.
So that is the change. A change, and flexibility is a must now. If you're going to be an employer, you must try to adapt to where your workforce can work from. Right. Now, we always say this, you can't build a car in your living room, but there are other industries that are electronic industries where it really doesn't matter. But I like the personal interaction. Quite frankly, I want our people to be happy, healthy, safe. I want to provide an environment where we can go ahead and allow them to work where they want to work. But I miss seeing people every day. I mean, I miss seeing a lot of people every day. I like a lot of people.
That's me.
It's a vibe.
And I like performing in front of a lot of people, right, Harv?
That's good. I like to perform a little bit.
Give this dude a mic.
I'm going to say that. I'm going to say that the clients, the purchaser, first-time home buyers, even second-time home buyers, it's not something they do every day. Families that I meet with or have really in-depth conversations with home ownership are that much happier. We are way more prepared. Oh, yeah. Their pre-approval, their approval is ready to go, and they close in 30 days, no hiccups. Again, 18-day closing on my last purchase that included 2 weekends and I think Memorial Day. The other lender on the transaction scrambling to get things done. We're still seeing that kind of stuff. It blows my mind. And again, some of them advertise on these stations. So don't think, Nick, clickers are interesting.
Yep.
I like getting a referral from someone who's been out there, who's in the trenches. Nick, I appreciate anyone you want to refer to me to this week.
Yeah, absolutely. You and I had that one, and I'm like, man, I knew you were good, but I didn't know you were this good. But I had to give you your credit there.
Hey,
Nick,
don't sleep on us, man.
Nick, we had a gentleman even call us this weekend, and we just different things that are real in our industry. And quickly, he wants to go look at a house.
Right.
I start trying to pre-approve him over the phone, and wow, he doesn't qualify. I don't even know if he had a job or anything. And then it leads to another. Nick, did you show him a house, or is he just? Where was that guy going with?
Well, you really
house?
have to evaluate the situation, and that's why I reached out to you right away. And I said, "Hey, how's he looking?" Because I do want to show him the house and establish that relationship. So I'm his realtor, but at the same time, I'm not one of these guys that has to have a deal. I'm not going to go all around showing a house just to somebody that's not approved. And it leads back to what Becky was saying too.
Why are we saying this? Here we go. Old guy, why are we still talking about the same thing 35 years later? The first call should be to see if you qualify, not to go look at a home.
Unless you got the money here, right?
That's what's on the other end of some of these sites where you click buttons to get an agent is, they'll go out there and show you, but at the end of the transaction, you find out no one was ready and everyone's scrambling, and now you don't have a home and you have a poor...
Becky, help me out here.
Okay,
help me.
feel like,
help
so
me.
with the button clickers, right, we're in a situation where old school needs to meet new school, right?
That's
and
right.
These one-on-one buyer consultations are more so it's more important than ever before. And I understand that if, let's just say it's a button clicker, I can understand an agent going and showing them that one house and saying, "Hi, nice to meet you, XYZ."
I gotcha, yeah.
But then after
right.
that, yes, you need to get in that
Absolutely.
conversation with
And
the
I
lender.
tell Harvey that too.
Because deals are falling apart.
Right.
Because sometimes I'm not always the first call. Shame on you people. But however, we will be that second call, and I'll gladly take that second call because I'll get.
You'll end up being the last call.
Well, yes, I might be the second, but I'm the last, and because there's Becky, this deal's falling apart. It was like a 3% down, and literally another lender denied the loan, and I looked, and so they call me, and I'm like, why? why was this loan denied? And we literally took it, we flip it, and we closed it in 2 weeks. And it took me 5 minutes to sit there, 5 extra minutes to figure out the intricacy of this transaction to make this happen. They just need to put a little bit more money down.
I'm surprised my buddy Don down in Taylor is not calling
Yeah.
the show right now. He listened to the show, got
Call him,
denied
Don.
somewhere.
Yeah,
He
but-
closed 2 weeks ago, Don.
But let me give I have to give the opposite viewpoint
Okay,
too,
sir.
because I have to be the devil's advocate. If you don't qualify, we're going to tell you.
Yes.
All right,
Yeah.
we're not. This is not a yes. Okay, then
Can't
go
be.
5 weeks down the mortgage gauntlet, and then we tell you you're not approved.
Yeah,
All right,
yes.
we're going up front. I mean,
Yes.
here's the deal. We'll tell you if we can do it. We'll tell you if we can't do it. There's no in between here.
Well, and
Either-
imagine if it was
either
all
you're-
yes the whole time. You're
Right.
going to get to the end of the transaction. You're going to hate realtors. You're going to
Yeah.
hate lenders. You're
Right.
going to hate the experience, and you're going to be
It's-
one of these buyers.
It's
that back
called
them.
"I hate you for closing my loan" syndrome.
Right. That's the
what
worst syndrome.
But Harvey hates when I say this. Good loans always close.
They
Yeah.
do.
They always close. So we'll tell you up front. All right. And that's the way it
Yeah.
is. Somebody calls us up and they've got it's a puzzle and we're putting the pieces of the puzzle together and we look at them and we go, not going to
And
happen.
I want to get into that because
Yeah.
Harvey and I are working
Yeah.
a few that we're helping people
So-
down the line.
So it works both ways. That's why, I mean, it just works both ways. Becky's not going to tell you something if it's not going to happen. She's going to make it happen. We're not going to tell you something that we can't do. And there's plenty of people, and I hear the music. We're going to a break, everybody. But you got to listen to people up front.
All right, great stuff. Keep it here all day long. Of course, you got Pat Caputo coming up after us. NBA draft happened the other day. Pistons might have hit a home run. Tigers beat Arizona last night. What else? We got the fireworks here in Detroit coming up on Monday and a beautiful weekend. All right, 248-539-9797. Keep it here. We'll be right back. Alrighty, welcome back to the show. 9:31. What a gorgeous day outside. June 25th, 2022. Definitely get out there. Call your local real estate agent and get that strong approval letter. They'll tell you to go to Capital Mortgage Funding, a 1-800-LOW-RATE, the best mortgage banker. They'll also tell you to get in touch with people like Nick Calty. They'll show you some great houses and really slow things down a little bit as we talked about some other things that are part of our industry. But let's put it back to home ownership because we've had some great closings. I've had some exciting closings in the last couple of weeks. First-time home buyers, young people getting out there. You know, I did the stats. It's just as expensive to rent nowadays than it is to own a house, and you're not building any equity at all. Becky, we got to get a lot of these renters into home ownership.
Listen, I think a lot of the rentals going up has also pushed a lot of people that were on the fence into the market become buyers. I have several where they were renting. They got that landlord letter and they're like, hey, my rent's going up $200. It's time for me to invest in myself. And a lot of it is because they don't know, they didn't think they could afford it, or it's nervous, right? You're never ready to really buy a house. Just like I feel like people are never ready to have kids. Like you think, oh, I have to have X amount in the bank. I have to do this. I have to do that, right? Well, sometimes you just have to jump and do it, right? But part of it's that conversation with the professionals, making sure you're set up for success. So I have a couple first-time homebuyers that literally got that letter, called me and said, this is what I'm paying for rent. I feel like I can own a home for this amount. And I said, you're absolutely right. And this is what it's going to take for you to get there. So they got accepted offer and we're closing next week, way ahead of schedule, which is a beautiful thing. And their house payment is right where their original rent was. And it's a beautiful home, Allen Park. I'm excited for them.
And they're building their own equity now.
Yes. Now they're investing in themselves.
You're not paying someone else's mortgage.
Because either way, you're going to buy a house, right? No matter what. So you're either buying someone else's house rent, or you're buying your own house. No matter what, you're paying for someone's house, so you might as well pay for yourself.
Pay for your own asset.
The numbers are off the charts. Median household wealth for homeowners is after you take out the home equity portion, $98,500 versus renters' average wealth, $6,250, for a difference of 1,469% wealthier. Homeowners are wealthier. They build equity. They have financial literacy. They generally, Harry, as home values went up, look, they go down sometimes too. Harry, in the last 2 years, they went up. Really, crazy numbers. We're not going to see that kind of appreciation, but an opportunity for families to go ahead and they did refinance, Harry. They did consolidate their debt.
He's
shaking his head, no, go, sir.
He's going, it's like
You tell me.
Because I'm the bad guy. I'll be the bad guy. Remember when your stock portfolio, remember when the Dow was up over 33,
Oh, I love looking at that paper.
And then you looked at your, whatever you had in there and you thought you were wealthy. And then it's the same kind of thing in the home equity market, right? So somebody tells you that you've got, and sales are showing that you could sell your house. If you sold your house for this, that you would gain X amount. Here's the problem. You didn't sell. So you never realize that gain, right? So now, and we're going to play word trivia. We're going to play word quiz, vocabulary quiz with Nick a little bit later. We're going to talk about words like crash and bubble and wealth and what those words really mean in this market. So it's kind of like that in the home equity market too. People are saying they've achieved all this wealth through home equity. Okay, yes, that's true.
It's unrealized.
If you took the money out, or like Harvey said, if you did a cash out refinance for home improvement, then you use that wealth that you built up in your house to go ahead and put in the pool or pay off a high interest rate credit card debt, which is why you should do it. You shouldn't do it to go down to the casino and throw it on black and cover green, okay? You don't do that. But that's being the devil's advocate. I have to look at both sides and say, well, people got really wealthy on paper, but did they realize that wealth? So that's where we're at. It's called a reality check, everybody. And that's what it really is. So, you can look at all the numbers you want. Homes appreciated, this, but what did you get out of it? What did you really get out of it? So I don't know. I like to analyze that. I'm a analytics freak. I
like the lifestyle conversation here. I like the sense of community as you say that a little bit more. What else are you getting out of this home ownership? Right. I talked to a young family yesterday and I said, isn't that great that your 6-month-old baby, you're just going to move into this subdivision. You guys are about to find the subdivision where all of his new best friends are going to be. And we look at the home ownership. It's not always about making the money and stuff.
No.
Sense of community. Maybe owning something free and clear, not having that payment as you get older in life, Nick.
Yeah, that's exactly right, and that's what we're here to guide you to do, is to build your own asset. And like we touched on earlier, it's like this is one of the biggest investments you can ever make, and you get to do it for 3% down. That's crazy. You get a $300,000 home. Here's $9,000. All right, lender, you take care of the rest of it.
For sure. And I feel like part of it too, like even people that are buying their second homes, it's not just the equity, it's a legacy also for your family, right? You're building a legacy, memories, right? That's stuff that you cannot put a price tag on. So some of this wealth that we speak of, it's literally, it comes within your family, the traditions, that camaraderie, that memories that you're going to be banking.
So are we going to live in that area for a long period of time? If you're buying that house now and there'll be people in your life say, you're overpaying. Here's the deal. Is it going to matter 10, 15, 20 years from now? You're going to stay there. You're building a lifestyle. You have a place to live. You're raising your family there. You're doing it. And don't look at the investment value out of it. Because how do you know what it's going to be worth 20 years from now? Look at what you're going to get out of it for the next 20 years.
Right, long term.
Right?
Yeah,
It's a long-term play,
investment,
Nick.
yeah.
For sure. And then just to piggyback, like we're not going to be in a bubble. Okay. So because there's a lot of cash that are in these homes. These are not overly inflated appraisals. These are people making conscious decisions to bring $15,000 of their own cash to go above whatever these appraised values are. Why? Because they want their Oompa Loompa and they want it now.
Right.
And no one's going to tell them that they can't, because who are you, Harvey, to tell me if I'm going after a house and I'm up against you, I'm going to beat you because I really want it. And that's what some of these homeowners were doing, which is fine. But now you have some buyers that are like, you know what? Stop the noise. With these interest rates being what they are, I don't also want to do that in addition to these rates. So I'm going to give you an asking. And if you don't want to accept that, then they're willing to move on to someone that is.
And, they have a plan that whoever's going to buy the house, they're going to be there for a while.
Nick,
Yeah.
I'm going to hire you to put my escalation clause in
Perfect.
there. I don't want to spend $25,000 over the other offer, but I will spend $2,000 over your
Right.
best offer, and I'd like to obviously throw it in there and become a homeowner. We're going to talk about funds to close, and of course, in this show, we always want to go over how to obtain this mortgage. A lot of families have some little bit of hurdles out there, but we got some good news on the credit side. Becky, as you know, medical bills now, our collections are not going to be reported on credit reports. This might help some family improve their credit scores. Again, folks, you got to have 2 to 3 lines of credit. You got to be paying these on time. But these medical collections have weighed down some other families in the past, and maybe this is going to go away.
Okay, so medical collections for sure were this like thing that were lurking over people's credit where, you know, a $25 medical collection that you kind of let go was dropping someone 100 points.
But why were they letting it go? Because the insurance company was supposed to pay for it.
Yeah, and some of them had no idea.
So now they're disputing with the insurance company, but the provider, the medical provider, decided to send this to a collection agency, a collection attorney, and boom, they threw it on the credit report.
Yep, and then you don't know it till I'm looking at your credit and I'm saying, hey, I'm looking at this. I think you need to reach out to them. Not only pay it, but you're going to reach out to them and say, look, I want you to delete this and stop reporting negatively on my credit report. And those words was doing a great service to a lot of people. So I did everyone a favor just now, but now you don't have to do it because they're doing it for you.
That's right. So, and what happened in the old days was that we'd have the conversation, so you have to pay the medical collection because it's showing on the credit report. And they would say to us, I'm not paying it. No way. My insurance was supposed to cover it.
Right.
I'm not going to do it. Well, then we'd have the tough conversation. Here's the deal. You don't pay the $175 medical bill, you don't get the $200,000 house.
Yeah, because
Okay,
it was
which
just an
was-
easy way to get your credit score up. And it was actually a disservice of what they were doing to a lot of people.
Correct. And I'm glad it's over.
Yes.
And finally, after all these years, over.
That's right.
Well, we always touch on the credit position here. Of course, you got to have open lines of credit in order to build a good credit score. Call a qualified lender. Again, talk to us about these credit cards. We don't want you to get credit card debt. We want you to use the credit card to establish lines of credit. And basically, you're showing everybody, you're showing a future underwriter that, look, I'm responsible and I can make these minimum payments on time. So it takes credit to get credit, and that's
Yeah.
very important. Also,
Stay on the credit for a second.
I'll stay on it.
Okay, just
the
real-
do's and the don'ts real quick. Go ahead, Beck. You got
Yeah,
more.
just real quick. I just wanted to people hesitate on that first credit pull.
Yep.
They're saying, oh, I don't want my points to go down, yada, 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 right? I want you to hear me when I say a credit inquiry affects your credit scores by less than 1%. You know what affects your credit scores? Not making your payments on time. That is going to affect your credit scores. So stop hesitating on that initial credit pull, and that's where it all starts. And you also can have more than one inquiry when it comes to mortgages, and it's going to count as one pull. So reach out to us so we can educate you on that so we can know where you're at financially.
For free. We don't charge for that. For free.
It's all for free. 248-539-9797. We'll be right back. All right, welcome back to the show, 944, the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding in our 23rd year, giving you mortgage and real estate talk, making you a successful homeowner. That's how we do here. If you're currently renting a house, call us, Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Get a strong approval letter. We'll put that plan together. Becky, we always talk about the clickers and people just getting in, and of course, the way the internet works with a lot of information on social media. That's a good way to start. But I always ask these clients in the first call, I'm like, yeah, that's great. I'm excited for you buying a house. And our first question is, of course, how much money are you working with? And, of course, the funds to close are important. You could use your 401k, Becky. You can use a gift from family members. You can use your savings. Also, you could use the MSHDA program. Becky, down payment assistance, those programs are in play for families.
Yeah, I feel like down payment assistance is really going to be that knight in the shining armor right now for a lot of people. But with these down payment assistance programs, you either fit in the box or you don't. So if you exceed certain income limits, you're not going to be fit in the box, and you can't hide it. It is what it is. However, those rates are set and the funds are set, right? So if you do qualify and you make under the minimum requirement or the maximum requirement, you can get up to $7,500. Or if you're in certain zip codes, that's going to give you $10,000, and it's a rate that's kind of below the market right now. So it's definitely something that we're always looking for when we're having our initial conversation. We have every program that you could possibly think of available, like the Shinoa. There's all these different community programs. So we're here to help you, but it's always part of that first conversation. We're going to see if you check all the boxes, and if you don't, we're going to tell you where you fit.
All right, let's go out to Brandon out there. Brandon, thanks for calling the show. Good morning and welcome to our show. Go ahead, sir.
Hi.
Hi there.
I didn't know whether to take you off the car speakerphone or the...
You sound good. Keep going. Go with your question. You sound good, Brandon. Go ahead.
Okay, great. Thank you. I've been listening to you guys pretty much every Saturday for quite a while. My question is, I'm 52 years old. My wife and I met about almost 2 years ago. We got married, and we bought a house in Clinton Township. It's a 3,000 square foot house, 5-bedroom, 3-car garage. We just bought this 6 months ago, and we actually got a little bit money off it, which was surprising to me. But we want to retire in Florida here in about 3 to 5 years. The house needs a little bit of work. Is there a way that we can purchase a house within the next year, or should we keep putting money into this house? I'm just trying to get you guys.
Yeah. So, are you talking about? So, there's two things, right? So you're saying, should you put money in this house? Are you talking about the house that you currently live in?
Yes.
Okay. So, if you are wanting to buy a second home potentially and then eventually sell your existing home, that is something that we can have a conversation right now about. However, at this point in time, you would have to qualify for both mortgages. I have a client right now. He wants to retire in Florida. He hasn't retired yet. He's buying his second home right now in Florida. He can maintain both mortgages. Once he retires, his plan is to sell his home in Michigan and then live full-time in Florida. But right now he works in Michigan, so he can't technically do that. So we're buying it as a second home in Florida. As long as you qualify for both those payments, you have to put at least 10% down on a second home. But that's part of the conversation that we'll have, is just looking at what's your assets, what's your budget, and then it's going to be like, are you physically able to do both those things? And if you're not, then that's okay. Then you can decide if you're going to really just go gung-ho on your existing home and stay there. Or if your dream is to buy a home in Florida, this is exactly how you start it. It's just a conversation to figure out where you at and what you need to do.
Brandon, in your back of your head, are you thinking that if you don't buy now in your young 50s here, that you'll get priced out and you won't be able to retire down there one day? What's going on in your head?
Kind of, yes. That's kind of what I'm thinking.
And when you bought your house in Clinton,
plus,
go ahead.
I'm sorry. Plus, I feel like I guess it's been 5. It was in January we bought this house, and everything. I looked for months and months, and I finally found this big house. It's big, but it's outdated. It's in 1971. It was built, and there's things that it needs, and I don't know how much money to put in that, or would it. Exactly what you said. I'm kind of wondering, are we going to get priced out?
Yeah, I think that you're going to determine the level of work you need to put into it to sell it. You might need minimal amount of work. I don't know. You're going to have to get somebody out there to check it out. Nick, maybe you could help out with that situation to see what return that they would get. You got to really check that out. But also, you're 52. You're looking to go down the floor. I think it's a move that a lot of people are making. They're looking at it. It's a situation where Becky said, you got to see if we qualify for both houses And if not, get Nick involved to see what kind of work you need to put into the house.
Yeah, I was just going to say that, Brandon. Let us come out there and take a look because, the past couple of years it's been like, just list your house. It doesn't matter what's wrong with it. You're going to get an offer for, 10% more. But now we're at the point where buyers are a little smarter, the ones that are remaining in the market. So it really just depends on what that home needs work-wise. And, coming out there and taking a look at it is really going to be what the deciding factor and where you should go, especially over the next couple of years, knowing that you're looking for a home out of state.
Brandon, thanks for the call. Really appreciate it. We'll call you off the air and just get into a little bit more numbers and stuff. What we do quickly, Beckley, as you know with most clients, is we quickly start qualifying people. It's all about the numbers with us.
Yeah, even now, our minds are
our
going
mind
like,
already numbers.
Yeah.
How much we could almost did the whole qualification, debt to income ratio and everything over the year. But again, we're going to start looking at income, your future income. We're going to break down some numbers. If you can squeak by at a younger age, and instead of, Harry, selling right now selling a home to purchase another one, if you can maybe buy that rental or that second home now, maybe you can turn it into a rental or an investment and maybe profit from it, or at least break even on it. Again, can you qualify to purchase another house based on your debt to income ratio? It's all about the numbers. I had a client and not a lot of money, and he always said to me, Harvey, I can't wait to buy that place up north. I'm like, you only qualify really for about 60, 70,000. Sure enough, last year he found about a $75,000 cottage up north. He loves it. And, again, his dreams came true. I didn't think the numbers were going to work, but sure enough, they worked. It's affordable, and he just loves having the place up north. And it's gone up in value probably another 10, 15% since he bought it last year.
Yeah, I love that. I mean, I feel like I love that part of our job is when we can really allow someone and help someone achieve their goals. I mean, these are some, it's really a lot of people's goals is to buy a home or buy that second home, buy that cottage. They don't care. People don't need a $500,000 house, right? A $60,000, $70,000, that piece of real estate that you've always envisioned, that is success in someone's mind. So who is anyone to measure what is success for somebody in home ownership?
Overwhelmingly, what I hear in conversation is, I should do it now. I never should have waited. Okay,
we were really trying to push people the last couple of years.
Yeah,
now's the time.
I hear people say all the time, I should have pulled the trigger sooner. That's what I hear. I regret the fact that I didn't do this sooner because now, look, I could have enjoyed it the last 2 or 3 years. I should have pulled the trigger sooner. Now, very rarely, you might hear, well, I should have waited, but no, it's usually I should have pulled the trigger sooner.
Mm-hmm. And I love the fact that, like you said, well, look, I don't know, you can only do 70,000. Well, guess what? He found his perfect piece of real estate,
great.
his own little sanctuary, exactly where he wanted to be. And I love that. I love that story.
I'm caught watching these videos, I guess, on Facebook and stuff where there's guys out in the woods with, building their own houses out of wood and hacking away. I love that kind of stuff. So to get outside in the wilderness, to get up north or, again, wherever your dreams are, whether it's somewhere in the ocean.
Yeah, my father-in-law has a place up north, and it's one of those spots where it's like, how do you even find this place? Like, there's literally, it's like the black hole as far as service goes. You get no service whatsoever. So it's like, how do you find it? And people just drive around, you go up north, and you see these cool places.
That is some of the qualifications. Like, look, if my cell phone works there, then I don't want to buy it, right? Yeah. That's definitely what I don't want to buy. All right, last figures, 8 million veterans out there are homeowners. Well, 3.8 million are renters still. So if you are a veteran, you served our United States here, and you served our country, we definitely want you to become a homeowner. Again, it's pretty easy stuff, too. Certificate of eligibility, your DD-214, your honorable discharge documents, that's all you need. We'll qualify you. We'll find out what it takes for you to become a homeowner. Again, if you're in your 60s, 40s, if you just served recently, the VA eligibility, the VA program is awesome, Becky. 0 down, up to 4% sellers concessions. Still a lot of families wanting to help our vets out. They're willing to do some sellers concessions, bump up the purchase price of the house. We can get you in for a little down. Call the experts at Capital Mortgage Funding for your VA purchase. 248-539-9797. We've got a couple minutes here left on the Hardcore Mortgage Show. We'd like to hear from you. Nick, we definitely want you to finalize the show here with some different thoughts on what you got going on. We've had some fun buyers. You've had some whole bunch. I see. I'm not getting those referrals from you, but it looked like you closed 2 or 3 buyers.
Mortgage quiz crash. What's a crash?
Yeah, what is that?
What is a real estate crash?
Crash is a buzzword that people are throwing around at the dinner table with friends and family, and nobody really actually knows what it means. But there will not be a crash. The spending
they heard their brother-in-law's sister's mother-in-law's father talk
right,
about
and they're
it.
just bouncing it off each other. But the difference now is that you have qualified buyers and people have the cash to get into homes. There's not going to be a crash where there's there's equity in all these homes. People are pulling out equity. People are transferring equity.
Yeah, I think it's like, so people get hesitate and they they think that like, oh, well, the rates are going up and that's the telltale sign. No, this is just something, we have a lot going on in the economy, things around us. But like Nick is saying, these are well-qualified mortgages. This isn't you have an 800 credit score and I'm going to type on a piece of paper that you qualify for $1 million like it was. It used to be a stated income, stated asset. We never did those subprime loans here at Capital Mortgage Funding. And we don't even, right now, ARMs are becoming popular again because of these rates. And I was actually having the conversation, I never lead with an ARM.
Never.
I'm always leading with a fixed rate. Now we can talk about an ARM, but you have a lot of these lenders that are saying, oh, well, your rate's going to be X, Y, Z. And I'll talk to these clients. I'm like, is it an adjustable rate mortgage? And they're like, well, yeah, well, I don't know. Okay, well, you need to find that out because there's no way that rate is a fixed rate mortgage. And I was like, we can do an adjustable rate, but you never, if someone is leading with an ARM, you need to reevaluate your conversation in that lender.
I like that a lot. I'm surprised we didn't get into it earlier.
Yeah.
I checked out some rates yesterday. Again, I surfed the difference between our 7-1 ARM, Becky. We have a great 7-1 ARM program and a 30-year fix. It's about 0.5%. It was real close. We can probably get you 0.5% lower if you take a look at the 7-1 ARM. Again, what are your plans? How long are you going to stay in the house? That's an adjustable rate mortgage. Again, locked in for the first 7 years. After that, every 6 months it changes.
Yeah.
Might make sense for some families, Harry, but not all.
Correct.
Yeah, I think that you have to really take a hard look at it. If you're going to be in for a short period of time, and ARM might be the program. If you're not, but you want certainty, a fixed rate is always the way to go.
Yes.
All righty, that sums it up for the Hardcore Mortgage Show on this glorious day. Of course, we'll be back with you, if not next Saturday, the one after that. Be safe out there. Of course, we got fireworks season kicking in. Again, be careful out there. Keep your pets inside. They're scared of that kind of stuff. Nick Calty, always want to thank you, Remerica United.
Thank you very much for having me again,
All right,
too.
we'll see
It's
you
always
next
a blast.
week. You're always fun to hang out with Nick anyways and
Appreciate
have
it.
lunch
You
with
too.
and stuff. Great guy. And hey, congratulations, a new father.
Yeah, absolutely.
Yeah, congratulations, Snap.
Thank you so much.
All
Thank
right.
1 month old today. It's
All right,
cute.
if your family's growing like Nick's is, you might need a new house. Be sure to call Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. We got Pat Caputo coming up next. He's the next hitter. And keep it here on 97.1 The Ticket.